Good morning, everybody. Happy Monday. It's May 12th, 2025. Great to be with all of you today. My name is Bob Lang, and it's time for our daily bites. We bring this to you every Monday and Thursday morning, roughly around 8:30, 8:45 Eastern time. Talking a little bit about markets, what happened maybe today over the weekend. We're going to get to that in just a couple minutes. What's happening currently and what we may see down the road here. So it's a big week, right? Obviously, huge weekend news with apparently the United States and China came into some sort of an agreement about trade, and both countries lowered tariffs to about 30%. The United States from about 145%, which was in place just a couple of weeks ago, and all the way down to about 30%. Now, of course, the caveat here is that this reduction in tariffs is for about 90 days. So basically it's like sort of a cooling off period, gives us about 90 days for the constituents to get back together again and iron out any differences they may have and iron out even more ironclad agreement. So it still remains to be seen if this gets done. I think that the events over the weekend are encouraging, though, to get a deal done. And certainly the stock market is applauding this agreement as well too, and thinks that it's going to lead to something better down the road. Look at the S&P 500 futures up 175 handles today. That's better than 3% for the open here. The Dow Industrial's up over 1,000 points. That puts it over above 42,000. The Nasdaq also very strong, up better than 3%. On that Nasdaq tech heavy index and the NDX. So listen, you know what? We'll see if this holds. I'm going to just tell you one thing, right? If you're long stuff, if you're long options, long calls, maybe long puts, if you're use that as insurance like I do, I've got some puts that are going to get blasted today, but I have a lot of calls that are going to do extremely well. All I'm going to tell you is this, give you some advice. Find that sell button today. Find it on your computer right now or your tablet or your phone and use it wisely and use it often today. So I'm going to tell you, use that sell button because we know what can happen with markets that go extreme like they are today. It starts with a lot of short covering, a lot of enthusiasm, a lot of piling on. We could go up 400, 500 points to the S&P 500. That's fine. Keep some positions on. What I like to do is if I'm in a situation where I have a nice profit in some calls or something like that after a nice rally like we're going to have at the open this morning, I like to roll my positions up, right? So if I'm sitting there, I do have some at the money calls for the S&P 500 for the SPY. SPY closed at 564. I have some 565 calls expiring today and tomorrow. Those are going to explode today. They're going to go up to the SPY looks like it's going to open up about 580. So those calls, which are about $4 or $5, are going to open up at about 15. Why do I need to keep that risk open on the table and potentially get it lost? So a 175, 200% winner, I can take that off the board. And what I can do is I can certainly buy an at the money call or slightly in the money call when I'm ready to do that. It could be right away when I sell that call, or it could wait an hour or two or three, whatever, if I want to wait for prices to come in a little bit more, because that is smart trading. That is the way you take risk off the table. I could sell if I could sell those at the open at 15 and I'm in there at 5, I've taken my whole entire original risk off the table and taken some profits off. And if I decide to put another position on, maybe for the end of this week or even for next week, that is a zero risk position. What does that mean? That means it's not costing me anything. I'm just using the profits from this previous trade to get into the new trade. Does that make sense? So use that sell button today. Find that sell button on your computer or whatever device you're using to trade, and use it often today. I'm telling you, we've seen days like this that go up and get reversed in a very, very short period of time. This is time for you to demonstrate where you have control of your account. Don't let the market or anybody else or anything else take control of your trading and your account. This is where you need to step in and be active and show some courage, show some control, show some restraint, And if you want to, again, if you want to stay in some positions, that's great. You know, take some money off the table and just roll it, and make sure you build up that cash reserve today. So let's take a look at the charts here for a minute. I want to show you that this is one that we haven't looked at in a while. New highs, about a few weeks, new highs, new lows list, and you can see over the last couple of weeks, it's just been flirting with the 0 to just under 100 line, right? And the markets have been kind of jittery, yet we haven't seen a breakdown here in new highs, new lows. Very important, because I think that tells you a lot about support for the markets, and especially from big institutional players still willing to step in there and buy the dips when they happen. And they've happened over the past couple of weeks. Certainly last Monday and Tuesday, everybody remembers last Monday and Tuesday, we opened up sharply lower both days and got pounded by the end of the day. But we saw that last week we didn't see much of a drop in new highs versus new lows. So that's a what we call a positive divergence. Remember, it's not a signal. It's just an appearance that we have to pay attention to and recognize. All right. S&P 500. Well, we see last week it made an attempt to get up to above the 200-day moving average on Thursday. Didn't quite get there. We had a doji here. It's clearly going to go above there today. And the Nasdaq also, I'll show that to you in just a second, did cross the 200-day moving average for about 5 minutes, and then it came back down and closed below it, and it closed below it on Friday. Where do I think we're going to head to? I think if this rally continues on, we're probably going to get up to here. Is it going to? It's going to be a clean move up there to about 59.50. Probably not. I mean, I think we're probably looking at going up here, maybe coming back down a little bit. Volatility here, and then shortening the volatility a bit, and then making a run up there, possibly the end of May to the early part of June. Right? We could finish the month of May very strong now with some heavy volume and some good price action over here. And what does this pattern that I'm showing you right now indicate here? Inverse head and shoulders. There have been a lot of these out there over the past weeks, 4 or 5 days, past week or so. We've seen some other interesting charts with this pattern here. And if we break through this level here, we're going to get actually the line over here. If we break through that level, we do have quite a bit of room if this inverse head and shoulders plays out from about 48.50 all the way up to the neckline to about 5,700. That plays out to about 900 points. I would say, you know, maybe up to the 6,700, 6,800 level. Listen, I've been thinking the market's in a bear market for a long time, but things change, right? And when conditions change, like John Maynard Keynes said over 100 years ago, when the conditions change, I change. What do you do, sir? So you have to being able to be flexible and be willing to change and say, look, you know what? The condition that I thought we were in may have been right for a few weeks. It's not right now. And it's okay, because you're allowed to play the other side. Don't forget, if you're bearish and all of a sudden things turn bullish on you, it's okay. You close the bearish trades and you start looking for bullish trades, and vice versa. If things are bearish and you have a lot of bullish trades on, that's okay. You just close the bullish trades and you start looking for bearish trades, right? So there's nobody tying your hands behind your back and saying you can't participate in whatever direction you think that the market is going into and whatever the market is telling you, right? I think a lot of people look at this open today and say to themselves, oh man, I've missed it. Well, I disagree with that. Certainly being a momentum trader, I don't think that markets just go up in one day and come back down again. Now, it certainly can happen, right? And we've faced moments where markets shoot right up and come right back down again. But that's with a lot of volatility. Look at the VIX over here right now. Come look over in the corner over here. The VIX is down more than 10% today. It's up down almost 10%. The VIX futures are down about 10%. That's a big move down, right? That means, tells you what? Tells you that big players, big money players, are not really interested right now in buying protection, not worried that the market's going to go down here in the next 25, 30 days. And that's important information to know, right? The big money is not worried about a market coming down, a correction. Is it complacency? Sure, but we've been rather hesitant right now, and we need. I think what we need to have happen here, folks, is we need that complacency to rebuild itself, to get into a situation where people are start thinking that, oh man, market's just going to go up every day forever. And we know that that is a dangerous mind frame to be in. That's a dangerous condition to be in. When we get to that area, I'm reaching for as many puts as I possibly can, but we're not quite there yet. I think if we get to that point, it could be 2, 3, 4, 500 points up on the SP 500. When we get to that point, well, we're going to shift gears once again. But as of right now, listen, I don't see anything getting in the way of charging this bull higher. So let's see how that works. So guys, I'm going to be in California tomorrow for the rest of the week, and into early next week. I will be back hopefully on Thursday morning at 5:30 in the morning West Coast time with another Daily Bites. I also wanted to let you guys all know we are going to be sending an offer out, a chance for all of you guys to get a buy one get one free on the Spread Trader, right? Spread Trader is our product that that Sam runs, doing a great job. So we're gonna he and I shot a video last week talking about that meta trade that I talked about 2 weeks ago on CNBC. So it was a really good, strong trade. We cleared it out at a huge winner. It's still going strong today, $630. That's actually the level that I thought it was going to get to post earnings when it was trading at $548. It's at $630 right now. You can see that right here on the screen. So very interesting move here. So have a great day, everyone. Trade well. Remember, find that sell button today. It's important. All right. And find some new trade ideas. We have a big week of earnings. We have CPI coming out tomorrow. We have PPI coming out on Thursday. We have Chair Powell talking on Thursday morning as well, too. We have several other Fed speakers speaking on that day. So it's going to be a busy week. And of course, don't forget, big options expiration day on Friday. It's not a triple witching, but it's a double witching. So there's a lot of options that are going to be expiring on Friday. We did see a lot of options expire last Friday as well, too. And we see that building up as well. So have a great day. Trade well. And if you're in the chat room, I'll see you there a little bit later on today. Thanks, everyone. Bye.